U.S. Treasury Secretary Scott Bessent is about to drop a major bombshell. He wants to make the U.S. the digital asset hub of the entire world. This means that Bitcoin will also be massively pushed forward here. He says that crypto digital assets, and therefore Bitcoin, are still here to stay. He wants to promote innovation, and with smart regulation, the whole thing should be pushed forward here. He also provides new, exciting insights into Donald Trump's tariff tactics, which are very, very important for the Bitcoin price development, depending on how the tariffs develop here. He gives a very, very important explanation here as to why tariffs are not bad for the markets. In the long term, we're going to see if that's really the case. He also addresses Donald Trump's statement that he wants to pump the markets up or down, and in the stock market. No matter what, he's definitely caused quite a stir. And he even addresses the spending problem in the US, which a lot of people completely overlook. This is something Elon Musk always brings up too, that you can't just keep throwing money around endlessly. So we're seeing two different paths now. Europe and Germany are throwing money around like there's no tomorrow. And the US, which is becoming more cautious in its spending policy, is even making cuts, even talking about issues in spending policy, even discussing debt problems and deficit issues. And this is extremely relevant for Bitcoin and the entire financial markets, because what the Treasury Secretary and Donald Trump are doing here in the US always has a huge impact on Bitcoin and the global financial markets. Now we're going to take a look at why this interview is so explosive, and why this interview is being discussed so heatedly right now. First off, it's all about the whole digital asset story, including Bitcoin, crypto, and so on.
On the show,
Treasury Secretary, how does it fit into the overall U.S. economy, and where does the government stand on regulations?
Good. Well, thanks for having me on the show. And as I think this administration has made abundantly clear, digital assets are here to stay, and we are going to make the U.S. the digital asset hub of the world. For the past 4 years, the crypto community, digital assets, the administration retarded their growth, and we are set to accelerate that through a positive partnership and through smart regulation. Senate and House are both pushing through very sound, safe bills to bring crypto and digital assets onshore in the U.S. and to make sure that the U.S. is both the financial and the technological leader.
They want to be financial and technological leaders here globally, worldwide, and digital assets, crypto, play a really, really big role. On the one hand, it is ultra bullish because the entire regulation is to be relaxed not only for Bitcoin, but for the entire crypto market. They really realized how important it is to focus on Bitcoin, crypto, digital assets, and so on, to set that up. That also includes stablecoins and so on. In addition, what is bearish about this whole statement is that he does not explicitly highlight Bitcoin. He's always talking about digital assets, he's talking about crypto, but that could also be a strategy. Cynthia Lummis has already talked about how it is simply much smarter politically to talk about digital assets than we are seeing, including Michael Saylor, who is talking more and more about digital assets and less about Bitcoin, because he too has now realized that he too is just teaching Bitcoin to 15 chaotic people. And even for people who are close to Bitcoin, it's often better to simply introduce them to Bitcoin here. You don't come in swinging a sledgehammer and overwhelm people. Instead, you start with digital assets, you frame it with crypto and so on. I don't think that's a good approach, but that's just the political way of doing things here. Scott Bessent says this is definitely going to be very, very positive for Bitcoin. This will definitely mean that the crypto reserve, the Bitcoin reserve, is going to be pushed further. At least, that's how I understand it. They're talking about smart regulation here. So it's not that there's no regulation at all, but that we have smart regulation. That means, for example, that we might find different ways to accumulate Bitcoin, and also how to implement stablecoins. I said that again and again. Here, Bitcoin is probably an essential part of the whole digital asset strategy. But what's way more important for the US right now is to push all the stablecoins forward. Scott Bessent has said that too. Here, the US is supposed to remain the dominant currency. They want to achieve that through stablecoins. That means they're covering the whole spectrum here. So it's all about stablecoins, but it's also about Bitcoin. Everything is supposed to be pushed forward here, and Bitcoin will benefit massively from that. And now a clip of Donald Trump is about to play on Fox News. He reacts, and it's really, really crucial how he responds to this, because Donald Trump is talking about the whole situation here, and especially how that connects with the stock markets, and that could become very, very relevant for Bitcoin. But first, let's take a quick look at what he has to say, or rather, what Donald Trump has to say, and how Bessent reacts to this.
He feels very confident about the outcome of all these tariffs. Listen to this really quickly.
You're going to have drops, and markets are going to go up and they're going to go down.
Yeah.
But you know what? We have to rebuild our country. Our country has been stripped of its jobs, of its factories, and we're going to change it around. And it's all taxing policy. You know, it's really a policy because we have great workers, great people. It's really a policy of taxing and incentives. And I'm bringing the incentives back.
Like I said, before we check out the reaction, he says, yeah, simply put, the markets go up, they pump, and then they go back down. Donald Trump knows that he can pump and hype the markets here, but he says it's all bullshit. And that's also something that the market views with a lot of skepticism. He says that in the short term, he doesn't care about the markets at all. And that brings so much uncertainty to the market because he says here, hey, he doesn't care about the stock market. What matters to him is really getting the country back on track, bringing the incentives back into the country. That, for example, work becomes worthwhile again so that people with bullshit jobs end up on the street instead of being supported by the state. That there's going to be a major cleanup, that the chainsaw is going to come out and all the scandals are going to be exposed. Maybe even all the corrupt institutions will be audited, like the Federal Reserve, Fort Knox, and so on. That everything is just going to be cleared out. And that you can stay here again. I mean, we can just create a more efficient state. And that was Donald Trump's statement here, where he said, hey, the tariffs, in the long run, it will be good. I mean, I always think tariffs are bad. But Donald Trump thinks he can use them to get the economy back on track. Anyway, here comes the response or reaction from Scott Bessent. And that would really shock you.
The president says there he's bringing the incentives back. He wants manufacturing growth. He wants job growth here in the United States. That's really the overall goal of these tariffs. But, Secretary, are you as confident as the president that these will be effective?
Laura, I couldn't be more confident. And look, these tariffs have become a bit demonized over the past few weeks. I think over the coming weeks, as the administration, led by the president, Commerce, USTR, with some add-ons from Treasury, we are going to see a long-term plan for reindustrializing the U.S., as the president talked about, and for making trade more fair. The bottom 50% who don't own assets should get real wage increases, enjoy economic security, and that's why President Trump is in the Oval today.
The global financial markets are absolutely critical because he says here that there is a long-term plan, and we've never seen anything like this before. That means the two governments have always looked at things very, very short-term. By the way, I forgot to mention that earlier. Regarding digital assets, Scott Bessent also mentioned that he has always pushed back against both administrations, saying that he wanted to offer this and didn't think it was that great, because now the shift is happening here. And just like that, the shift is happening. Before, people thought short term, and now they're thinking long term. But that means there could be a lot of turbulence in the short term. I already said in my video yesterday that the 4th, April, is going to be really, really crucial, because here the reciprocal tariffs are going to be introduced. And until then, the market is filled with a lot of uncertainty. Scott Bessent says that what Donald Trump is saying here is bringing even more uncertainty into the market because investors want to know for sure. And as long as there's uncertainty in the market due to all these tariffs, and we still don't know how everything will turn out once the final tariffs are implemented, and so on. As long as that's the case, hedge funds and big investors are just holding back their capital. They're still in risk-off mode. And what Scott is doing now doesn't necessarily help to get back into risk-on mode. On the other hand, a very important statement was made here that even people who have no assets, that they should also benefit from this, from the economy and so on. Because at the moment we have the Cantillon effect, where the people who are profiting the most are those who are very close to the money creation or who have assets that they can pawn, lend against, and use to get new loans and buy new assets. So that's the Cantillon effect in a nutshell. And he says that even people who are here without assets should benefit too. And he wants to do that through tariffs by possibly lowering income tax or other taxes through those tariffs. He also goes on to say that he definitely wants to fight inflation, which is a really, really big goal of the Trump administration, to bring down inflation so that interest rates can also be lowered. And I don't know if I'm just interpreting this, but the way he said that even people who currently don't have assets should benefit, that would actually be the ultimate argument for Bitcoin. Because that's also what I always tell you, hey, you don't need $1 million to get started with Bitcoin. You can easily start with $10, $100, or $1,000, and you have exactly the same benefits as someone who has $1 million or so. In the real estate game, it's not like that. Someone who already has a few properties has a much better credit rating. They get better interest rates, better loan offers, and they can even get a loan at all. Some people can't even get loans, and they end up getting better house deals and so on. That means you have a massive advantage if you already have a lot of wealth here. But that doesn't count with Bitcoin. You have exactly the same advantages as Michael Saylor. And I don't know if Scott Bessent meant this with his statement, but if he meant that with his statement, then that would be huge for Bitcoin. So they want to become the hotspot for digital assets. They want to promote digital innovations here. They want to bet on Bitcoin and crypto here. Of course, also on all the Bitcoin and so on. Of course, also on the stable coins and so on. But overall, this is a very, very bullish outlook that Scott Bessent is giving us here. And it definitely sounds that way. It's turned 180 degrees, so it's exactly the opposite. And it, funny enough, sounds exactly 180 degrees twisted compared to what the European politicians are telling us. They say, hey, let's go all out with this stuff. Digital assets, Bitcoin, they want nothing to do with it. So it's funny that we're seeing completely opposite policies here. And now we have an important statement that we need to look at, where it's about the issue of debt. And any German politician could really take a page out of this. Friedrich Merz and so on.
Great, the good. It was one of the reasons I came out from behind my desk and asked President Trump if I could join the campaign. Then when he asked me to be in the cabinet was because I was so alarmed by this high level of government spending. We've never seen anything like this. Highest level ever when we weren't in a war or in a recession. So the Biden administration relied on this blowout spending, back to the mainstream media. No one criticized it when they were doing it because it was for the great and the good, it was for green programs, it was for this, it was for overseas engagement. Now what we're trying to do is do a course correction where we bring down the government, we deleverage the government and re-lever the private sector.
So there's a massive warning here. He says we have really concerning levels of debt. So that's what you need to understand. That's exactly what Elon Musk always says. If we keep going like this, or if the US keeps going like this, then it's going to lead to a quick bankruptcy because they have debt levels that are, let's say, completely out of control. At the same time, we're not in a global economic crisis. At the same time, we're not in a state of war. And normally, you would only have such levels if you were either here during World War II, or then really just before bankruptcy or something like that. But that's just not the case right now. You're in a completely normal economic situation. And he says that his goal here really is, and that's the big message, not just to the EU, but also to both governments. He says that his big goal is to rein in the spending spree. And that's also why I say every German and European politician can take a page out of my book here, because they're doing exactly the opposite here. They're really going all out here, even more debt programs, even more special funds, even more special debts, and so on. The problems aren't even addressed. Instead, they're just finding more creative ways to create new debt laws. And here in the US, they say exactly what they don't say in Europe, in Germany. They say, hey, debt is a big problem. We need to address the problem. And we can't just cover up all the problems we have here in politics and the economy with even more debt. So I found those statements super relevant. Let me know in the comments what you think about them. If you still want to buy, I'll put a link down below where you can easily and simply buy Bitcoin. You go with the code, up to 20% off the fees when buying Bitcoin. Super easy, super simple. Definitely check out 21 Bitcoin. I'm signing off from the beach. Or what does from the beach mean? From the beach in El Salvador. Guys, see you later. Peace out.